Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2024, and we're diving into the latest earnings report from Celanese, a global leader in chemical and specialty materials. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Celanese has just released their third quarter earnings, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Celanese reported net sales of $2.6 billion for the third quarter of 2024. This is slightly down from the previous quarter. John, can you elaborate on the company's profitability despite the sales dip?
Absolutely. While net sales saw a slight decrease, Celanese managed to achieve a GAAP diluted EPS of $1.08 and an adjusted EPS of $2.44. The operating profit stood at $248 million. This performance is commendable given the challenging demand environment, particularly in key markets like paints, coatings, and construction.
Operational efficiencies and future outlook. John, Celanese has been focusing on operational efficiencies. Can you tell us more about their strategies and future outlook?
Certainly. Celanese reported an operating EBITDA of $644 million, reflecting their focus on cost management. They're implementing additional cost reduction programs expected to save over $75 million by the end of 2025. Moreover, they're planning a $200 million inventory release in the fourth quarter to boost cash flow. However, they announced a temporary 95% reduction in their quarterly dividend starting in 2025 to support deleveraging efforts.
That's a significant move. How does this align with their long-term strategy?
It's a strategic decision to navigate the current demand challenges while positioning for long-term growth. By focusing on cost reductions and cash generation, Celanese aims to strengthen its financial position and enhance shareholder value over time.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the engineered materials and acetyl chain segments perform this quarter?
The engineered materials segment reported net sales of $1.5 billion, with a slight increase from the previous quarter. Despite a constrained demand environment, they managed to offset volume declines with a favorable product mix. The acetyl chain segment delivered $1.2 billion in sales, maintaining stability through strategic initiatives like the acetic acid expansion at Clear Lake.
And what about their strategic initiatives in Asia?
Celanese has been proactive in expanding its footprint in Asia. They recently unveiled the Asia Technology Center in Shanghai and opened the Micromax Electronic Inks and Pastes Lab in Shenzhen. These initiatives are aimed at supporting application development in high-growth areas, which is crucial for their long-term strategy.
Risks and leadership insights. John, what are the key risks Celanese is facing, and how is the leadership addressing them?
Celanese is navigating significant demand weakness, particularly in the automotive and industrial segments. CEO Lori Ryerkirk emphasized the importance of their value-enhancing initiatives and the need for additional measures to ensure long-term success. They're also managing their debt effectively, with plans to draw on a $1 billion term loan to address maturing debt. Additionally, the appointment of Bruce Chin to the board of directors brings valuable industry experience to the table.
It seems like they're taking a comprehensive approach to tackle these challenges.
Indeed, their focus on strategic initiatives and prudent financial management is key to overcoming current headwinds and positioning for future growth.
Key takeaways. As we wrap up, John, could you summarize Celanese's performance and investment prospects?
Celanese has demonstrated resilience in a challenging environment with an adjusted EPS of $2.44 and strategic cost reduction plans. While the temporary dividend reduction might concern some investors, it's a prudent move to support long-term growth. Their expansion in Asia and focus on high-growth areas are promising for future prospects.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Celanese's performance in the comments below.